Understanding RSI. The Relative Strength Index, or RSI, is a momentum oscillator that shows us the significance of recent price action. It is often used to confirm a trend's direction and to predict reversals in the markets. An oscillator is a type of indicator that moves up and down within a fixed range, with its resting point in the center, much like an audio wave or a seismograph. The RSI oscillates between values of 0 and 100, with its resting point at 50. The RSI is commonly used for evaluating the markets as overbought or oversold. These are used to indicate areas where the trend is likely to reverse or pause. With its default settings as 14 period, the RSI is considered overbought in values above 70 and oversold at values below 30. So to add an RSI, let's go back to indicators, and I have saved Relative Strength Index as a favorite, so we can click on that and it will immediately bring up the RSI. Now we can see we have the purple line and we have a yellow one here, which is quite hard to see. So this is once again one of the new updates in TradingView. They pretty much give you the option to put a moving average on anything, including a moving average on our moving average. So I like to start by turning these off. So I don't need this RSI based MA here. I also don't need these bands. I'm not using those at the moment. So I can turn all those off, and we're just going to focus on the RSI, the upper band, middle band, lower band, and the background fill. And then we also have our inputs. So I'm going to style this in the way that I like. The purple is okay, but I actually like the orange. So I'm going to change that to orange, and I made the line a little bit thicker so it's easier to see. I'll change the background fill to the same kind of color. And now we have our middle band line is the one at 50, our neutral line. I like to make that one a solid line so it's a bit easier to see. And I might actually darken that too, just so it comes through a little bit better. Okay, now we have our overbought and oversold areas. Overbought being our upper band, and we can change this from 70 to 90 if we would like, or we can change it to just be 60, so it's right down there. 70 is the default, and I would like to keep it that way unless I change the number of periods, because it'll react a bit quicker, and 70 might be a pretty common figure on a much shorter RSI. So for now, I'll keep those as they are. Now to visually explain the RSI, there's a very easy way of going about that as well. If I change our RSI length to 1, any red candle should be at 0, any green candle should be at 100. It is calculating out of all of these candles, what is the strongest push. Considering it's only calculating itself, the one candle, it's going to consider its direction the strongest direction of all of them, and it's going 100% in relation to all other candles, all others being none, just itself. So that's why all of these results will be 0 and 100. Now let's bump this up. It's going to gradually get more refined. So let's get it right back up to number 14. And we're going to look at when we went from this big push up. We can see these sudden candles were quite a big push up. That's a large candle right there. And you can see we were sitting at 50.53 down here. After that first green candle, we got a 53.91, second one 59.32, and then we get our big sudden push up. Now this is what the RSI is all about, the relative strength. In comparison to all of these ones, this is a very strong candle as it's much bigger than anything that's happened in the previous 14 candles. So that's showing this is a big strong move here, and it actually goes up to 77.06 after here. So this would say overbought in this region. That is above our 70 line. We could expect at some point soon for this trend to take a bit of a pause or to actually come back down. And we can see it pushed up a little bit more. It was still in the overbought region. Then it tried to get up there again and turned around, pushing right back down and having quite a long downtrend following that. You can see here it's just starting to turn around from there now. So that's a good indicator of how we can analyze a little bit of what the RSI is telling us. Now here's another good example. We are sitting around 50 here, and we've got another big push down, which drops this right down to just under 37 at 36.99. We've got a few other red candles and a few green ones pushing back up, and then we have another move of 4 red candles here. But that doesn't actually get down as far as these. These get right down to 30, so almost being oversold. Whereas these ones here get right down to 34.41. Why is this one so much lower? That's what the RSI shows us. It shows us a strong push down in relation or relative to the previous 14 or so candles. So we can see we're looking back to around these candles here. And so in relation to those candles, this is a sizable move. That's why it's pushed such a massive area down. And then we are continuing our down movement while including that in our calculation, showing that yes, this is a relatively strong move. Then when we get a pushback, it kind of evens out again. And these are all smaller moves down. So while the RSI is dropping, it isn't going at such a great length as this first move here. We can see that again over here where we have 7 consecutive red candles, but they're gradually making their way down and they get to about the same region, just over 30, and here we were just over 30 as well. So all up, these average out to be a pretty strong move and isn't just relying on one candle's move. Add the RSI to your charts, have a play around, and just get used to what it is showing you.